Financial regulators like the CFPB no longer view AI as an experiment. They scrutinize automated orchestration with the exact same rigor as human-led operations. Regulatory examinations now target the systemic logic of AI. A single fair lending violation from a biased model or a data poisoning incident can trigger the loss of a banking license and permanent destruction of consumer trust. This chart illustrates a stark warning from Gartner. By 2027, 40% of agentic AI projects will fail or be canceled due to escalating costs and inadequate risk controls. AI compliance is now a core board-level risk. Without a compliance-first architecture, escalating costs and regulatory scrutiny become the primary drivers of project cancellation. The global regulatory landscape is strictly enforced but fragmented. You must navigate mandatory EU AI Act data governance alongside rigorous US federal model transparency requirements. A static SOC 2 checklist fails here. You cannot audit autonomous AI with rigid tools. Instead, use a real-time trail, capturing prompts, intermediate reasoning, and actions. To justify outcomes, you must peel back the black box using explainable AI. High-value and high-risk decisions require a human in the loop. Threshold-based gating automatically pauses execution, forcing the agent to hand off to a human supervisor when conditions exceed defined risk limits. Moving to production requires managing AI as a digital worker. Enforce the same strict, auditable operational rules you apply to human staff handling financial data. Because AI agents process unstructured inputs and take actions independently, they introduce entirely new security vulnerabilities into your infrastructure. First is prompt injection, where attackers embed malicious hidden instructions to hijack workflows. Second is data leakage. Without context isolation, environments can expose one client's sensitive financial data. Third is hallucination, where agents execute trades on factually incorrect data. Neutralizing these requires strict sandboxing and active safety engineering. Organizations must prove these defenses work before launch. That means conducting rigorous adversarial testing to break the model and deploying continuous bias monitoring to ensure equitable outcomes. True fintech compliance demands a transition from passive oversight to active safety engineering,